My friends, what is going on? Hope you guys are having a wonderful Sunday. Just wanted to upload a video here heading into this next week so you guys can kind of anticipate and know what I think is going to be happening in the different levels to be looking for AMC heading into our first trading week of 2022. Like I tweeted out, I think it was Friday or something like that. In reality, Friday the market should have just been closed. There was just no volume. It just everything out of the market. The life was just pretty much sucked out of that. So I don't take what happened on Friday too much into consideration for my views going into this week. Obviously, like my last video that I posted, I wish that it would have. I wish we would have been, setting up right underneath that 30 range to make sure that this week really set up nice. But I'm not too concerned about the drop either. So starting out today, once again, if you don't follow me on Twitter, please do so. Colin_Gladman. That's going to be where I tweet out, lots of kind of like intraday price action of what I'm seeing and kind of where we're headed. So both on, good and bad days, you can kind of get the feel for what's going on there. I just tweeted out here a couple hours ago, basically this chart, which is basically showing, all the awesome movies and shows that are going to be coming out next year. And I think it's going to be a banging year for the box office once again, as more as COVID becomes less of a concern, more people get vaccinated, all that kind of stuff. We get back to more and more normal life. The past 2 days I've been watching, or really the past week, been watching a ton of college football. Full football stadiums. You see it at theme parks, Disney, things of that nature. The New Year's parties that you saw. Basically all over the place. And even if people are still, super concerned and wearing masks and things of that nature, life is starting to feel more and more and more normal every single day. And I personally believe that's going to continue. So this chart just basically shows a lot of really good movies that are going to be coming out this next year. But now looking at the TA, start with this chart, kind of one of the cycle charts that I've sort of been following. Not much has really changed, with this too much. So once again, both of these charts are going to be on the 30-minute chart. The top one is obviously where we are. The bottom one is kind of what was playing out in January. If you're new to my channel, and I'm sorry if you guys watch all my videos, I got to say this just about every single time. Number one, obviously, none of this is financial advice in any way, shape, or form. I just really enjoy TA and understanding and studying charts. And number two, when I talk about the cycle and the fractals and the patterns that we see playing out, I am not saying that everything plays out on a 1-to-1 ratio or anything along those lines. Just like I said last time, just because we saw a 10x from the January fractal last time does not mean I necessarily believe that we are going to see a 10x based off of the current fractal that we're in. Now, obviously, I would love for that to be what plays out, but that doesn't mean it's necessarily going to be what plays out. So, like I said, on the January fractal, which once again, it's not that we are in January right now, it's just we are playing out that same fractal. I've shouted them out a couple of times, but highly recommend following Mr. Booksy on both Twitter and YouTube. He and I are kind of seeing things the same way from a standpoint of, it's once again, just because it happened in January doesn't mean it's going to happen again. But, you can find this pattern that's playing out right now. I personally believe you can find it all over the chart. I just believe it's most obvious and most prominent in January. So that's why I use January as kind of my, look, this is what happened in January type of thing. So anyway, not too much has changed about this. We are, as of Friday, though, the parallel channel, we are starting to slightly break down below it. Which once again, down here, we did not ever do that. But once again, it's not a 1-for-1 move type of situation. But it is starting to break down a little bit. So obviously, I'm hoping relatively quickly, which I think we will. We'll start pushing back up into this channel and start, testing and pushing some of these higher levels. So, and the reason that I think that is because let's go here to my Wyckoff chart, which once again, guys, Wyckoff analysis is based on the composite man, and that's who you need to be thinking about, who you're trading against. And when you hear me or Rico or a Dave or a Josh or or Father, just about anybody who talks about Wyckoff on a regular basis, Trey, anything along those lines, there are going to be accumulations and distributions that play out on the chart over all different kinds of time frames. So when you hear somebody saying like, oh, we're in a distribution phase now, or we're in a distributed phase now, that doesn't mean to say that on the macro basis, on the zoomed out basis, that we're not in accumulation anymore. Then now all of a sudden it's turned into distribution. So when you track the micro movements, which once again, I can get lost in those weeds every now and then, but I really stress to try not to do that. Especially if, just being as honest as I can, you don't have the emotional self-control to handle that. If every single time you look at 1 minute or 5 minute bars and they're changing quickly and you start to panic or anything along those lines, that is not the time frame for that you need to be looking at, because you're just going to wind up panic selling, is the reality of the situation. So when I look at Wyckoff on the macro basis, so from the June run, this is going to be what I'm seeing. So we had our sell climax, we had the automatic reaction, we had the sell test, then we moved into phase B, we had a sell test in phase B, and then now we're playing out all of our spring and test. We'll be looking at to move up to that last point of support, and then moving up into the sign of strength, and then probably back up a little bit before we mark up. Now if we get moving just like what's happened before, so even if you go back and you look at what happened in June, once we started moving up, to the sign of strength and everything like that, we had a real quick, back up LPS before we moved into the markup phase. So I still think that what's going to happen is, I do believe all of this next part of the phase will play out much faster than, for instance, like all of phase B did. And the reason is because of what's going on in the option chain. And if we start seeing dramatic price movements going up, these market makers are going to have to hedge for all of the options that are going on in the option chain, because they have to have those shares for that. So that's where you see the gamma coming from in these markups. So we start moving up fast, especially with all these January 21st options that we've got going on right now. Man, you're going to see the price move when that happens. I'm not going to dive too much into the option chart, the option chain, just because honestly, that's not my wheelhouse. What I like to do is I really like to, study and focus the chart. I do not have a strong enough grasp or understanding of the option chain to tell you exactly what might happen, when it happened. I recommend following guys like Josh and John Hollowalk, or I'm probably not saying that right, but John on Twitter. Those guys both kind of look at the option chain a little bit more. Would highly recommend following those guys. So, but if we start seeing big price, movements upwards, you're gonna see the gamma moves for sure with what's going on in the option chain. But I do not buy options. Okay. Do not buy options. I buy shares. Once again, I only make money on those shares when I sell them. I only lose money on those shares, when I sell them, and I'm not selling them. So, like I said, I stay away from the option chain, except for doing the covered calls and the covered puts when I buy. And by the way, there was enough interest on that. I'm definitely going to do one of those videos explaining kind of how I do covered calls and cash covered puts. But anyway, once again, from a Wyckoff standpoint, we're just now getting, towards the bottom of this range right here. So, that the bottom of that range is going to be, let's just zoom in here a little bit more. The bottom of this range is going to be coming in right around that, once again, that 27 ballpark. So basically, we had our terminal shakeout. We moved to the top of the range. We got kicked back down, which is perfectly, normal and expected. And now we're just kind of testing in this range. And then the next move, I believe, is going to be, breaking out of this range, moving back up to that sort of mid 30 level, which I'm definitely hopeful, that we'll be able to start seeing this week. Once again, we've got the inverse head and shoulders playing out. Definitely want to start seeing that right shoulder, start to move back up. All the wonderful price action that we saw on Thursday was quickly wiped out on Friday. However, the Friday volume was just non-existent. So just with a little bit of volume coming back in, we'll be able to, recover this distance and percentage relatively easily. On my the other way that I have been tracking kind of what's going on here is, let's see here. Dude, this drives me bonkers. If anybody in the comment section can tell me how to not have it to where every time I go back to the chart, it's all pulled up, all wonky and everything along those lines, I would be greatly appreciative to you and your services. But so here's another way that I've been kind of tracking this January move. I've talked a lot about it. So from the top right here, we respected this downtrend right here until we didn't, until we broke out of it. So I literally made the exact same line from here. And as you can see, once again, every single time we've come up to this resistance line, as of right now, we've been kicked down and off of it. So from the bottom of the spring down here, I made this line, where we kind of formed a little bit of a pennant here until we kicked out of the pennant, and then that's when we started moving into our markup phase, which once again, that's going to be a similar move that I believe we are about to see. Now, I had drawn this line here because we were respecting this line. Now, we still could, we can start moving up very quickly on Monday, and this could be just a momentary break of this trend line and it not be a big deal. But also too, right here, I kind of made this dashed line right here. And let me explain why I made this dashed line. So from back here, and it comes down to fibs. So back here in January, from the time of our spring to the top of the move where we met the resistance line, we retraced down to the 0.5 fib level, okay? So now once again, it's not necessarily always going to be one for one move. So that doesn't necessarily have to happen again. But if, as of right now, we are bouncing around and moving around the 0.382 fib, which I've talked about this before, but on the Fibonacci retracements, your 618 fib and your 382 fib are your two most common ones. So, I would definitely love for the 382 to, just keep holding up and we just keep, moving up, right on down to that. If we don't, just like I had talked about before, the 0.5, kind of right at that 26 level. And then also too, we have the golden pocket, down here at that sort of 24, 25. Again, this is just my opinion and it's not financial advice, but I 100% believe that the speed line that I've drawn down here that touched both springs and everything all along those lines, quite confident that this is going to hold. I believe even if the 0.5 doesn't hold, I believe the 618s will hold. I don't see too much more downside. Somewhere around that 25. The 786 is basically at 23 range. So, but that would be even breaking the speed line. So I wouldn't be surprised if it was either the 0.5 or the 618. And once again, for me, that's kind of my maximum downside. But I don't even know that we're going to see that. I'm always trying to prepare you guys and prepare myself, for certain levels that we see. So if we did start to come back down and, started to see that $26 range, is what it is. Once again, this is not a quick trade for me. So, I got time. I'm not worried about that. So like I said, from the fib levels, so this dashed white line right here, that might be the area where actually we'd wind up, getting caught and then starting to move out of the pennant as far as that is concerned. But once again, As far as potential downside still coming, that's what I would see as far as any potential downside. So I think we could see a little bit, but I don't think it'll be a lot. And honestly, there's definitely part of me that thinks, there's this 0.5 right here. There's if you follow Booksy's videos, he talks about a 3 spring area that we're kind of coming through right now, and I definitely think that's a possibility, and that would be right around that area. Next, let's go look at, once again, what I've been harping on is OBV. So if you zoom in here, sorry. So once again, this is going to be the OBV on the 4-hour chart right now. So really where we started kind of making our big divergence was sort of right here, right around this, well, not right around, on September 30th. So from September 30th on the OBV, the on balance volume, we have done nothing but slowly make higher lows and trend upwards. However, price action has done nothing but come down. So having said that, I pulled up what is on balance volume, and I did it in TradingView, and so I'm just going to read it to you. The on balance volume, or the OBV indicator, is used in technical analysis to measure buying and selling pressure. Let me read that again. The OBV is used in technical analysis to measure buying pressure and selling pressure. So let's go back to the chart. Measures buying pressure and selling pressure. So there has been way more buying pressure than selling pressure. Now, the price has not reflected that, but the OBV has. So it's a cumulative indicator, meaning that on days where price went up, that day's volume is added to the cumulative OBV. If price went down, then that day's volume is subtracted from the OBV. The OBV value then is plotted as a line for easy interpretation. So I'm not super smart. So, easy interpretation. Okay? I'm smart enough to see that a line is going upwards on OBV and a line is going downwards on price. You don't have to be a genius to see that. Let's go back. So, if you come down here, let's read about what's called a divergence. A divergence occurs when price movement is not confirmed by the indicator. Let's go back to the chart. I would say that this price movement is not matching the indicator. Don't have to be a genius to see that. Let's go back. Especially considered, I apologize. Let me back up. So the divergence occurs when price movement is not confirmed by the indicator. We just looked at that. In many cases, these divergences can indicate a potential reversal. So once again, they show you right here that if OBV is climbing and price is going down, that indicates a potential reversal. OBV is climbing, price is going down. So, through technical analysis, I believe a potential reversal is coming. I believe that price is going to catch up to this OBV. So, bullish OBV divergence occurs when price declines, but OBV advances. Let me read that again. Bullish OBV divergence occurs when price declines, but OBV advances. Price declines, but OBV advances. All right? So, this is why, like I said, I just don't see a lot of reason to be, super concerned. They keep dragging it down a little bit more. I'm not worried about that. I don't think, that is going to be the case or anything along those lines. like I said, this level right here, this big extended line right here, I'll make it real big for everybody. Once we start breaking this neckline, I believe we're going to start seeing big time reversal moves coming. So as far as what I see for this week coming up, you guys are going to love this. It depends on volume. All right. So if we have real low volume, I expect kind of a small reversal and us to start, creeping up towards that $30 range. If we have big volume starting to come in, or even if it's just reasonably big, around that 80 to 100 million, I think that low to mid 30s is going to come relatively quickly. And with, massive volume, we start seeing, 200 million plus volume days. This sort of 3850 area and everything like that right here, that level is going to come real quick. As always, whether we start moving up or down, keep your eye on the indicators, all the RSIs, the MACDs, everything along those lines. Once again, if we start moving up quickly, if those RSIs, the relative strength index, those start getting overcooked, we're going to see the pullback. And you want good, solid, healthy pullbacks the entire way. So overall, my friends, once again, there's just nothing to be too stressed out about. We got a lot of good things coming. Keep your eye on everything, and I'll see you tomorrow in the markets. Have a good one.